Ever opened a Forex app, seen something like Euro USD, and thought, wait, why can't I just buy euros? Well, here's the thing. Currencies never come solo. They're like that clingy friend at a party, always arriving in pairs, never letting you breathe. And that's exactly what makes Forex unique. You're never trading just one thing, you're always in a relationship, whether you like it or not. So today, let's break down what a currency pair actually is, how base and quote currencies work, and the 3 types of pairs every trader needs to know. By the end, you'll look at EUR/USD and actually nod like you know what is going on, instead of thinking it as a Wi-Fi password. Let's start with the basics. What is a currency pair? In Forex, you never buy a currency on its own. You're always swapping one for another. Think of it like shopping. You don't walk into a shop and just grab an orange without paying, you hand over cash to get it. Same idea here. If you buy your USD, you're buying euros while selling US dollars. If you buy USD JPY, you're buying dollars while selling yen. A currency pair simply measures the value of one currency against another. It's basically financial Tinder. The euro and the dollar are swiping right on each other, whether you approve or not. Now, how do you actually read these pairs? This is where base and quote come in. The first currency in the pair is the base, and the second one is the quote. So EUR/USD, euros the base, dollars the quote. If the price says 1.35, that means 1 euro costs you $1.35. Simple. Picture yourself at a money changer. You hand over $1.35 and he slides you 1 shiny euro. No magic, no mystery, just maths. And here is the important part. The price tells you how much of the quote currency you need to buy 1 unit of the base. That's it. Once you get that, the fog starts to clear. Alright, now let's talk about the 3 main types of currency pairs. First up, the majors. These are the heavyweights, the celebrities of Forex. They're the most traded pairs in the world and they always include the US dollar. Think EUR/USD, GBP/USD, USD/JPY. They're highly liquid, spreads are lower, and if you're just starting out, they're your best bet. Like training wheels for Forex. Then you've got the crosses. These kick the US dollar out of the picture and let other majors trade against each other. Examples? EUR/GBP or GBP/JPY, they're still fairly liquid and popular, but just not traded as heavily as the majors. They're like the supporting actors in a film, not the main character, but still essential to the story. And finally, the exotics. Now, this is where things get spicy. One major currency gets paired with the currency of a developing country. So you'll see things like USD/USDU, that's the US dollar versus the Mexican peso, or EUR/TRY, which is the euro against the Turkish lira. They usually have higher spreads and come with higher risk. Basically, they're the vindaloo of Forex. Delicious for some, painful for others. So let's do a quick recap. Currencies always come in pairs. The first one's the base, the second one's the quote. The price tells you how much of the quote you need for 1 unit of the base. And pairs fall into 3 categories: majors, crosses, and exotics. Majors are safe and liquid, crosses give you variety, and exotics, well, handle with care. If that cleared up some confusion, hit subscribe, because in the next video, I'll show you how to read Forex charts without feeling like you need a PhD in hieroglyphics. Trust me, it's simpler than it looks once you know where to focus. So stick around. Forex might be unpredictable, but learning it doesn't have to be.